Hey everybody, welcome back to the channel. Today I want to go over the AM Silver Bullet after NFP. So it would be August 4th. So let's get started. Let's take a look and see what NFP did. This is where the candlelit NFP was on Friday. And you see it comes down, takes out liquidity, and then comes up. These purple lines are the new week opening gap. And then this blue line right above it is the midnight New York time price, and then this dark black dashed line is the 8:30 price, 8:30 opening price. See it opened right there. Okay, so we're going to start this silver bullet hour close to it, but here I want to show you before the silver bullet started, and you probably see it right now as you're looking at it. So let's just mark it up. When we looked here, when it came up, where it came to, this is buy side liquidities taken. That's the previous day's high right there. So it took a major liquidity pool out, okay? And then price came down and then came back up, right? Making newer high, making this a breaker block if it passes through it. But when it comes back through, there's your market structure shift right there. Leaves behind a fair value gap there. Let's mark out the breaker block. I would use the bodies, not the wick on this one. Zero breaker block to the downside. And then when we look at, I like to start looking at the 2-minute chart as well. And so when I'm looking at the 2-minute chart, just to see how the fair value gaps line up, there's a 2-minute fair value gap right there. Okay, so there's a lot of gaps that are in this area right here. I really like this smaller one here. Price came up, barely tapped. If you look, it doesn't hit the breaker block. All right. Now, if you went the breaker block to the wick instead of the body, you got it, right? So it's kind of preference. I know I've seen ICT take it from the wick when it's a long wick like this. You take just the bottom and not the body. I'm a candle body fan, but I can see where this would play out and how it would work out. So if you're using the candle wick, because it's so long, it's longer than the body, you use the bigger part. I can see using the wick. So we'll just leave it at the wick right there for now. Notice how the candle bodies don't go in consequent encroachment of the breaker block if that's how you used it. But it did go into the 1-minute fair value gap and did touch the 2-minute fair value gap. Just came right to it, right? So you'd get in right there, right? You'd put on your portion right there at the bottom of the 1-minute fair value gap. Your max, I go as 5 handles. I know that I normally put my stop above the one tick above the first candle of the 3-candle pattern here, but I don't go more than 5 handles no matter what. So 5 is my max stop right there. Where am I targeting? I target this 8:30 opening price. That'd be my first target, and that's 3 to 1 or 1 to 3, right? Now, we will definitely take partials if we close around the or below the new week opening gap. We come here, we're taking a partial. Why? Because this is very likely that you'll get a pullback and some sort of reaction in this area. Not all the time, but most of the time. You definitely want to take a partial here and then move your stop to break even, because a lot of times it'll hit the new week opening gap, retrace a little bit, and then go back down or continue. Okay? All right, so let's our short sells right there. So I'm gonna do it right there. We're gonna go candle by candle. So I said I'd take a partial at new week opening gap. So granted, we would have been filled up here, and I would have been better if I would have taken my short right here based on trading view. But it is what it is. Okay, so let's see how this goes. Okay, I need a candle close there. Okay, we'll buy one here. Then we take one off. We move our stop to break even. Let me show you where my stop would be. Trailing stop. Stop would be right here. 1 tick below. Okay. There we go. Button. Okay. There's our trade setups right there. We're in the silver bullet hour. It hit right at our 830 line, perfect. And now where can price go? We could see that it could take out this low, go here. There's a fair value gap right here. There's a fair value gap right here. So we're kind of in the middle of that fair value gap right now. So let's just see how it continues to play out. This starts the silver bullet hour, so now let's see if we get displacement, if we get a reversal, or if we just continue on, and at that point we'll start looking at fair value gaps. Let's see how it plays out here. There's a fair value gap right there. Let's mark this on the chart. Oops. There's a 1 minute fair value gap, not a 2 minute. So there you go. Okay. So when I look at this, I look and see that this is where it went. It went down to this order block here. Right now, I'm holding it. So I want to see if it's going to keep going, because an order block's pretty powerful PD array. I want to see it break through this and use that as a resistance to go down. I want to see this low taken to continue for shorts. Otherwise, this may be a reversal area. And if it does, I just want to see a short-term high being created and then broke through with displacement, or I want to see it break through this fair value gap, use it as an inversion fair value gap and up. There's no other fair value gaps here. I mean, there's one really small one right here. If I can even get it to mark out right there. I can't mark it. It won't put the name in there, but that's a 1 minute fair value gap. So let's just see how it plays out here. See if I take another trade. I'm taking 2 contracts. Okay, so it just blows right through it. Doesn't care about that. Hitting the fair value gaps. So see if this holds here and comes back down. We can go shorts and target this low, and then maybe this low. So we'll see how it reacts here. Okay, well, we left another fair value gap here, so we're in between these two. So now, like, because we have this one here and this one would be now an inversion, this one would be, I want to see how price is reacting. Just in between PD arrays, you have a bearish PD array right here, you have a bullish PD array right here. So I kind of want to see, use this as support and down. Would be great. Because it's reacting off that one, which is a good sign to go short. Okay, but we're still on that order block, so I'm watching. So it can close below, and now it's back up in, so still waiting to see what's going on. I got a bullish volume imbalance right there. Alright, so we got a short-term high being, let me move this out of the way. So you have a short-term high right there being, let me just move this like this. Short-term high being cleared right there. See if we leave open a fair value gap right here or not. If we do, that'd be good. And we can use this inversion now as an inversion. So let's move this to an inversion. It's closed. Because it closed, so look, it's a bearish fair value gap, right? We expect it comes up, it creates a price, it pushes it back down. Awesome. That move right there from here to here would have been, let's go right here. From, if you got in at the candle close or start, you got 6 handles right there from that one, if you just would have taken that trade. From this one down here to the order block, 5 handles. Price came back up. Now this becomes an inversion fair value gap because price went right through it, and if it comes back down, we can take a trade up into it. Okay? Let's see how price. Okay, now we have another fair value gap from here to here. And when I look on the 2 minute, you also have a 2 minute fair value gap right here. Okay, so now we've got a 1 minute, a 2 minute, and an inversion all in the same area. Kind of like we have this pocket of cluster of PD arrays right here. I'd expect a strong reaction when it comes into here. So if it does come down into there, I'm going to take a trade. Okay, we're buying 2 there. It's up higher, but it would have hit our top of the 2 minute, into our inversion, into the middle of our 1 minute fair value gap. So we've got, it's in the middle. It would have hit us in. I would have put my limit order there. It would have taken us in. So now where would I take my first partial? Let's see how far. Yeah, I would take that to there. I would be fine. Where am I targeting? Here's 10 handles. 10 handles. You can go to this breaker block here. I'll move my trailing stop here. Let's just move it out of the way. So this is, what is that? 1 to 2. It's fine. We already took a trade here beforehand and we won. So we don't want to give a reach for too much. So let's go 1 to 2. And if we want to go to the top of the breaker block, we can go there. That's fine. I'm going to take a partial after it goes past the new week opening gap, because that is always a point of possible reversal, things like that. So let's see. Okay, here we go. See how it wicked in for a little bit further into this cluster, but the candle bodies still don't close any lower than where we entered. So that's a good sign. So we'll wait for a candle close above. See, like right, that one would have taken me out. I would have had my limit order above the new week opening gap, and it would have taken me out. So we'll see how it goes here. And my stop would have been 1 tick above. So if it comes back down to our red, I would have been taken out. All right. I'm taking 1 off there, just because that would have been fair. That's where I would have done it. It would have taken me out anyway. All right, flatten. Let's move this back there. Let's see how the rest of the hour plays out. Just go higher, keeps going higher. Hesitates right there. It's got a lot of PD rays to go through, right? So you've got this breaker block that it's coming through. You've got the 1 minute fair value gap is now becoming an inversion. You've now struggling with the 2 minute PD fair value gap here. I know we're past the hour. I just want to show you what happens here. So there is the 1 silver bullet trade, and then 1 9:30 opening range trade. So let me take these off and explain what we did. So at 9:30 we see that price went up after NFP, and it took out buy side liquidity on the previous daily high, created a swing low, broke structure with a new high, making this a breaker block when it trades through, and a market structure shift. So price came down, broke structure. We marked out our PD rays. We looked at the 1 minute, we had a fair value gap. We looked at our breaker block. We decided to use the wick, not just the body, because the wick is longer. It's personal preference. There's a ton of ways you can mark the breaker block, either by wick or body. So we took that trade. There's also, if you look to the left even more, that wasn't even marked. Here is a fair value gap here that when it traded through right here became an inversion, and so you got wicked in there as well. So I'm not going to throw that on there because it's just a lot of stuff right here. But that's another reason why it was just going to go in institutional order flow entry drill, just a little pink right in there, and call it a day. We got in, we took our trade. First target was the new week opening gap. We took a partial off, moved our stop up. Then we targeted the 8:30 opening price for full TP, got it. And then price continued on to the order block. That's fine. And then we saw price moving up. We marked our PD rays. We have a small one here, and then we had a 1 minute fair value gap right here. Price came up, tapped that 1 minute fair value gap, and then went back down to the order block. Had we taken this trade here to here, we got 5 handles again. But we saw this PDR respecting it, but then it left behind this fair value gap, so we hesitated because we wanted to see how it was going to react to this price, right? So that's why we didn't take that trade, even though it would have worked out. That was why, when we were going back through, that's why we waited. Price came down, kind of respected this fair value gap. Went through it a little bit, but it did more or less hold, but the order block is what really was the powerhouse there, I think. Price came up, you have a bullish volume imbalance here. Price came up, broke the short-term high, and then we left behind a fair value gap. We looked at the 1 minute fair value gap from here that went through. That became an inversion. This one came in inversion right here. And then we looked at the 2 minute. We had a 2 minute fair value gap right here. So we kind of watched what price was going to do. And we took our trade when it came into that cluster. And then we were going to take a partial at the new week opening gap. We waited for a candle close a little bit higher, because it would have taken us out right there. Took a partial at the new week opening gap, and then we targeted this breaker block here and got out right there. Price did trade a little higher, but that's your silver bullet trades for August 4th after NFP.